Welcome, folks. Welcome to Sunday Night Futures Live. This is Bob Desmond over the Contrarian Trader, and thank you for taking a bit out of your Sunday evening and joining me as we discuss topics such as the economic data that was released last week. We'll talk about it. We'll talk about the data coming out this coming week. I have a couple of articles off of Zero Hedge I want to touch upon. Colton, hey. Sam, how you doing, buddy? Okay, Sam, hello, Bob. Did you know that Italian debt was sold in October? No. Demand was 20 billion, so they sold 7 billion instead. I didn't know that. Good information. I was unaware of that. Well, welcome, everybody. So after we get done with the comments that I want to mention with regard to, not euros. Oh, I see. That's interesting. Okay, I will. Interesting. That I hadn't heard. We'll talk about the Fed. A lot going to be happening with the Fed soon, folks. The trade deal, I'm not going to talk all that much about it because it doesn't matter. They want you to look at the trade deal. They want you to think that it's a done deal. There's no deal. If we roll back the tariffs on the Chinese, we lose. It's over. They can wrap it up in a fine bow, call it phase one, call it cupcakes for all I care. It's not a deal. And we lose if we roll back the tariffs. So I'm not going to touch upon it all that much. They want to say it's the tariffs that is helping, or the talk of a trade deal is driving up stock prices. Nothing could be further from the truth. All you need to do is take a look at the Fed's action, their balance sheet relative to the stock market, overlay them, and you could see that the performance of the stock market is directly correlated with, you guessed it, the Federal Reserve intervention in the banking system in buying up bills. Simple as that. So they'll keep talking about this trade deal, how great it's going to be. There's no trade deal. There's no trade deal whatsoever. And if there is a trade deal and they roll back tariffs, they'll be back on shortly anyway, because the Chinese will not live up to their word. It's not in their best interest. Hey, Terrence, good to see you. It's been a while. 500 billion, yep. $100 billion tomorrow alone. We'll go to that article. And as soon as we're done with the headlines, we'll go over a couple of charts that I spoke about on Thursday Night Futures Live. And I did a lot of commentary that night. I was going to do a clip and play what I said on Thursday night in advance of tonight's commentary. I think that we were proven right that the price action on Thursday evening was not going to hold up. Reality was going to set in. The euro was shooting through the ceiling. I said it's not going to last. It's not going to last. If the Tories won, you would see fear enter the market, and you would see the euro pull back because it's not good for the euro. It's going to be good for the U.S. dollar, which reversed on Friday. It was getting clubbed on Thursday evening, but it reversed to close higher on Friday. So it just don't pay attention to the knee-jerk reaction. Avoid it, observe it, ask yourself, does this all make sense? And most of the time, it doesn't. And sure enough, we saw reversals on Friday in a very, very big way. So we'll talk about the pre-market futures. Then we'll talk about the charts that we're watching for the coming week. I have 5 charts I want to go over. DAVA, I spoke about that one last week. GUSH, I spoke about that one last week. BRZU, same deal. UGAZ we talk about every week, but I think there's a short-term pop to be had here fairly soon. We'll go over that one. And EWW, that's the Mexican ETF. It was overbought when I first talked about it several weeks ago. It's since pulled back last week. Beautiful price action. I think we're poised to get long of the EWW. I want to buy international stocks, not necessarily funds with China exposure. And one of the key reasons is that I'll lead off with this article here. And I've been talking about this, but it just doesn't seem to matter much in the grand scheme of things. This is as of today, actually yesterday. China's moment of reckoning arrives. 38 billion renminbi. State-owned giant announces largest dollar default in 2 decades. This is on the heels of other defaults. So you're seeing a lot of the air coming out of the Chinese bubble, and this is only going to continue. So let's go to the economic data that was released last week. Now, on Tuesday, there was no data on Monday. On Tuesday, we had productivity, which was revised. And the expectation was for a negative revision, which we got. However, it was a negative double expectations. Right? So the expectation was for a decrease of spot 1%. The actual was spot 2%. No great big deal in the grand scheme of things. However, when you see your labor costs rising relative to your productivity, that's not a good sign. Wednesday, we had CPI. I don't even know why they report it anymore. The Federal Reserve doesn't watch it. Nobody respects it. But inflation came in hotter than expected. At the core, it was as expected. Core X's out food and energy because the Federal Reserve doesn't want to pay attention to a number that shows food and energy because it's volatile. It's for real. We pay it, right? But it's inconvenient. They'll talk about it when it's convenient, when the numbers work in their favor. But when they don't, they ignore it. They pay attention to the core inflation number, and they use the PCE, not the CPI, but the PCE. And that's at 1.6% all in, well below the CPI. And it's insulting, right? Your cost of living is only going up 1.6% a year. Give me a break. Weekly jobless claims. I rarely talk about this number, but it came in a lot hotter than what was expected. So 1 week does not make a trend. Let's keep an eye on this because this is a big beat, and it's a bearish beat. Retail sales missed by a wide margin, too. This coming week, Monday, Empire Manufacturing Survey. Big number. Market manufacturing PMI number. Remember, the manufacturing sector is in contraction. Watch for a read below 50 here. You have the services number. Watch for a pullback there as well. Home building index, no big deal. Watch the building permits. That's more of a leading indicator how contractors are thinking further out. Industrial production, capacity utilization, job openings, weird. No big deal there. Weekly jobs claims. Again, we want to keep an eye on this number, see if there's a trend. Leading economic indicators, that can move the market. And then on Friday, we have GDP. And then, of course, we have core inflation and the CPI, consumer sentiment number. So a lot of economic data coming out this week, not to mention the errant tweets and twits that'll be sent out there by the president that could move the market at any given time. So let's take a look at the headlines besides the China headline. Sam already mentioned this, the Federal Reserve. They will be in the markets this week. It's D-Day for the repo market. On Monday, $100 billion in liquidity will be drained. What happens next? So here's the Fed's balance sheet. Ripping. It will exceed, by mid-January, it'll exceed the peak of the QE programs. The Fed's balance sheet will have eclipsed the peak of QE, all the QE programs. But it's the healthiest economy we've ever had. Go figure. What else do we have? Oh, this is a good one. The Fed will buy 40% of Treasury net issuance in 2020. So this article here is only speaking of bills. Now, at some point in time, to rein in, I spoke about this chart on Thursday night, the 10-year yield. When I spoke about it, we were surging on the 10-year yield. We were trading at the highs of the week, and that didn't even reflect how bonds on Thursday evening were getting killed and yields were skyrocketing. By the morning, it had all changed. You saw bonds rallying back and yields plummeting. And I said, they can't have this. This cannot happen. They cannot allow the 10-year yield to break out. Why? Why does that matter? It means that the Federal Reserve or Treasury has to pay a higher interest on our debt, which is ever growing. So sure enough, they hammered yields lower by buying up bonds on Friday. And we are trading back down below this breakout point. We'll see whether or not the markets continue to pressure the Federal Reserve to intervene yet again in the bond market. How will they need to keep control over the 10-year yield? They can't simply just go buying bills. They need to buy Treasury notes and bonds. Those are your longer dated maturities, your 5-year, your 10-year, your 30-year bonds. And that's what keeps a lid under these yields spiking up higher. So I actually think that this article here understates how much the Federal Reserve is going to be involved with the markets, or the bond market, in 2020 as the lender of last resort, or the buyer of last resort. So let's go to the pre-market, let's go to pre-market activities. I'm so used to doing swing trading today. Let's go to the Sunday night price action, 4-hour charts. I have the dollar up here. Let's start with the US dollar. Now, here was the dollar on Thursday night, absolutely annihilated. And I mentioned that we would probably break anyway. Expected a rally back. We got the rally back. Does it hold? It all depends upon news out of the Eurozone. How fast will there be a Brexit? Will it be a negotiated deal? But long story short here, folks, I am not bullish on the dollar. I think it's got a lot of problems, the least of which is the fact that we have the Federal Reserve's balance sheet just ripping through the ceiling. Who wants to own the dollar? Let's take a look at the euro really quick. And here's where we were on Thursday night. I said, expect this to pull back. Expect to pull back here. It's not going to last. And sure enough, we did. But we still held a lot of the gains from the gap up. And we are up slightly this evening. Now, the one currency, do I have it up here? Let's bring it up. Last week, we spoke about the Japanese stocks and the yen in particular. And I was looking for a breakout. I was back here. We got pulled back. We're back up here yet again. We're looking for a breakout on the Japanese yen. So the dollar, I think, is in real serious trouble. Very, very serious trouble. So what do we want to be long of? If the dollar's in real serious trouble, we want to be long of things that are denominated in U.S. dollars. That will rise in value when the dollar decreases in value. And the obvious guy out there, the 800-pound gorilla in the room, which had a very good week last week, and that was gold. And we are heavily long of the gold mining stocks. They broke out last week. We are down at current after a pretty good day on Friday. You could see that we have a bit of resistance at the 1482 mark. So I'm not ready to go adding more to our gold mining trade yet. We're going to still continue to sell covered calls. However, I think that we're going to get a breakout here, a fairly significant breakout on gold, the miners, silver. Silver, more of a laggard. but the gold and the miners fairly soon here. So where I was staying fairly near the money on our covered call trades, I want to go deeper out of the money on those covered call trades. And I only want to sell those covered calls when the price of gold and the miners gets a bit overbought, whether it be on a 4-hour or a daily basis. I want to sell. That way I'm hedging my position and generating income while I remain long of the trade, because our strategy here is to generate wealth by owning the shares and having capital appreciation based upon the share price, not necessarily generating wealth by selling covered calls. So we're using covered calls as a hedge and a way to generate some income. Sure, it's always nice, but more so as a hedge. So it's worked well for us the past couple of months while gold has been consolidating and our gold mining trade has been consolidating. But now that they're beginning to break out, we want to be a little bit more conservative so we don't get called out of that position. And that's what we're trying to avoid. We want to keep those shares. But if you're looking to generate income off of covered calls, members will be doing a private group session at 7 o'clock this evening, Eastern Standard Time, immediately following this broadcast. So join us in there. I'll send out a link under a separate email to members. So join us there and bring your symbols that you want me to discuss. And we'll talk about it there. And if you haven't hit that like button, if I can ask you to hit that like button, it helps me with the YouTube algorithm. I'd really appreciate it. Share with a friend, subscribe to the channel. I'd really appreciate that very much. And click that bell button. That way you get notified of when I go live in the future. And I also have a link in the, sorry I keep hitting the microphone. I have a link in the video description area below where you can opt into an email and you get an alert 15 minutes prior to me going live. The notification bell will not do that on YouTube. So just click that link, enter your email address. We hate spam too. You will not be spammed. Guarantee it. All right, so moving on. Let's take a look at silver. We are positioned in silver. We're looking to add more here, but it's down along with gold. And we are in a ever-tightening wedge formation here. And we're looking for a breakout. I think this will be resolved to the upside. So we'll be looking for a breakout on a 4-hour basis. Then we'll go looking to buy more silver, but we only want to buy silver when the market tells us we're right in our directional play and we see a breakout. If it breaks down, I'm not buying anymore. I'll wait for it to consolidate and we'll look to add then. We want to buy on strength. Let's take a look at, we're on commodities. Let's stick with commodities for a moment. Oil. We'll go with the light sweet price. Oil is setting up very nicely here. We're down at current about a 30 percentage point, but I think that we are going to break out. You have a little bit of resistance here at the $60 per barrel price. Once we get above there, we're going considerably higher. And of course, the Federal Reserve, they don't pay attention to this number. Inflation's not there. Well, you take a look at oil, and I talked about home heating oil quite a bit last week. We are breaking out, but they're not going to pay attention to this. They say they want inflation, but in reality, they don't want inflation, because to fight inflation means that they need to raise rates like Paul Volcker did, and rest in peace, he passed away last week. The Federal Reserve, what Volcker did back in the late 70s, early 80s, he raised interest rates up to 20% before he finally killed inflation. Could you imagine, even if they normalized interest rates right now, 5%, 7%, God forbid, the economy would implode. Our debt payments, our interest payments on our debt alone would eclipse the defense budget. Think about that. So at that point in time, when Volcker was the Fed chairman, we were a net exporter of goods. We had a trade surplus. We don't have that anymore. We have a trade deficit. This is not going to end well. This is going to end very, very poorly. Be positioned. as we're doing right now, gold, silver. We started building a position in Bitcoin again. So I'm going to do a video on why I think Bitcoin is going up a lot higher fairly soon. And a lot of people don't agree with the fact that cryptocurrencies will be perceived as a store of value. I do believe that they will be. They will have a place to be. And when you take a look at home heating oil here, weekly basis, we're breaking out of a long-term base here. It's not going to be pretty. Let's go back to the intraday charts, the 4-hour chart. We'll see how home heating oil is setting up right now. It's poised to break out here. We're looking good. We're flagging out. So inflation, energy inflation is poised for a move higher here. Let's take a look at nat gas, the spot price. I'll take a look at UGAZ in a moment. So we had a major drop back here. I don't know if fellow member Patrick is on. Patrick, are you out there? I've been eating up deer meat, man. He dropped me off several pounds of deer meat, sausage, tenderloins. I mean, really good breakfast sausage too. I ate it all. I have like a half a sausage left. So thank you, Patrick. All right. So what I'm looking for here is possibly a pullback on nat gas. I don't like this. This reminds me of a bear flag setup. I'd like to see a pullback, possibly a retest of the support level here at, let's call it 2.19. Look for a higher low, and then natural gas will be something to look at to buy. Let's take a look at stock market futures. We'll go with the NASDAQ. Up significantly. Looks like we're going to have a new weekly high. Inverted head and shoulders set up here. Left shoulder, head, right shoulder. We are breaking out, or poised to break out, above the neckline. Here's the neckline here on a 1-hour basis. So it looks as though the NASDAQ is going to move up higher here and break out new weekly high fairly soon. Let's take a look at the S&Ps. Let's go back to the 4-hour chart. Up, not as high as the NASDAQ. Up slightly. Let's go to a 1-hour chart. Not as pretty as the NASDAQ. Back to the 4-hour chart. Let's bring up the Russell 2000. The Russell's up slightly as well. It's off the highs of the session. Let's take a look at the 1-hour view. Not as pretty as the NASDAQ, but we're up. So upward bias to the markets this evening on Sunday night. Let's take a quick peek at bonds, and then we'll take a look at some of the stocks that we're watching, or ETFs, I should say, for the coming week. Bonds are down slightly, but they're off the lows. So that means yields at current are creeping up a little bit yet again. And for those new folks just joining in, thanks for joining. If I could ask you to click that like button, I'd really appreciate it. Thank you very much. Let's take a look at some of the symbols that we're looking at for the coming week. DAVA. Weekly chart, For those not familiar with this charting software, it's TrendSpider Automated Technical Analysis. There's a link to it below, 25% discount. So just use that link and you get a 25% discount. It's CT25Z is the discount code. It should be down below there. Weekly view, I'm going to overlay the weekly trend lines. You can see that we're bumping up against resistance here. But I think that we are going to break out this coming week. And what I'm looking for, that's my fault. Okay. In fact, yeah, let's go this way. All right, I'm looking for a breakout and a close above this upper band of resistance here. So I'm just going to set an alert. Keep sensitivity low. And I only want to buy these shares on a weekly breakout. Okay. We'll keep it active for a few days. And we're good to go. So I'm not going to set a support level I'm watching because I'm not long of it. All I care about is if it breaks out. If it doesn't break out, we don't trade it. Daily chart. Here's my alert. Stokes are looking good. RSI is looking good here. So we have a bit of an ascending wedge here. Triangle formation, whatever you want to call it. But again, we're looking for the breakout above weekly resistance. So DAVA looking good going into the new trading week. Hey, Blockchain, how you doing, man? Dream Driven, what's your question, pal? Let's bring up Gush while I'm waiting for the question. Again, we'll go with a weekly view. So there was an effort. I'm doing well. Thank you, Blockchain. A nice weekend, relaxing. But it's good to have the futures market open, and I love doing this. I get the biggest kick out of this. My plan is normally just to have this go 15, 20 minutes. I can't control myself. What are we into this now? 28 minutes? I'm not even, I have another 10 minutes easy of work, topics to go over. So I just love doing this. And thank you for joining me. I'm very grateful to everybody for joining me right now. I get the biggest kick out of it. So I have a great time. Thanks for asking, Blockchain. All right, so let's throw up some automated trend lines here, see what we're dealing with. And it's fairly clear. We had a breakout last week. We did, however, close off the highs of the week. So I'm not necessarily predicting a continuation move higher earlier this week. We may get it, but what I'd like to see, and after Friday's price action, I'm going to go over that chart in a moment. I think we're going to get it. I think that we're going to get a pullback and a retest of this breakout point. Then I would be looking to enter the trade. So I'm going to create an alert here. Touch. If it bounces, keep a little bit of sensitivity there. Get notified 4-hour basis. GUSH. Retest. Retest a breakout point. That would be a buy signal for me. And the reason why I like that is because if I buy at support, if I buy, this got aligned to the wrong, I'll fix this later on. I set the alert accidentally here. I don't want that one. I wanted the one in red. so I have to fix it. I don't want to waste your time. What it does, if you buy on a pullback and a retest at a support level, you set your stop right below it. So if you break back down below that support level, you don't want to be long because it had a breakout point failure. And you stop out, very small loss, very little risk, and you have a lot of upside potential here. So daily chart. Oh, and by the way, taking a look at these indicators, Stokes are rising. No breakout yet, but we have higher lows getting put in. Same deal here with RSI. So Gush looking good on a weekly basis, but we're not ready quite yet. Because when you take a look at the price action on Friday, we had a bearish key reversal bar. They tried to break it out. It was rejected. Voters said, no, you're not ready yet. So expect a pullback and a retrace back down to support. And I actually do like this alert where it's set right now on a daily basis. Now let's overlay on a daily chart with TrendSpider. You could add an overlay on a daily chart of weekly or monthly support and resistance levels, and they appear in dashed line. So here's where I really wanted to create my alert. I'll keep that other one active. So I have two alerts on support retest being set now. And this way, with the alert set it and forget it. And there you have it. I don't care about Gush until one of three things happens, or a mixture of both, actually. The first two, retest of support level A. If this one fails, then we look to this one. Or the third one, I want to know if we break out above this current resistance level. And we'll keep this one active for a while longer than the weekly retest, because I think we're going to retest quicker than we break out based upon the price action on Friday, which was pretty bearish stuff. Dream Driven, California rejection of PCG bankruptcy, and also looking at the daily chart. Has the chart confirmed a short-term? So Pacific Gas and Electric. Well, that's the they got blamed for the wildfires, right? I'll take a look at it. That's a symbol, PCG. I don't know if I would even want to toy with that. If that's a stock that's in bankruptcy or filing for bankruptcy, that's really a headline-driven event. I'd be really, really scared of that. They filed for bankruptcy. Their petition was rejected. Can you validate that? I would be worried about the reason why it was rejected and them amending it and then filing back for another attempt to go bankrupt. So I'll take a look at it. Just out of curiosity, I'm interested to take a look at the price, the price and how it's related. Can you let me know when that rejection of the bankruptcy claim occurred? What date that was specifically? All right, so our alerts are set here for Gush. We're good to go. BRZU. This puts you long of Brazil. This is a leveraged ETF. One of my alerts has already been triggered. All right, so we have a weekly chart up here, and we broke out last week. So let's get rid of this. We're going to remove that alert. I want to set a new one here. Because the dream entry point here is a retest of a breakout point. Again, I'm just thinking risk, right? So if I buy at that support level, I keep my stop loss just below. Small loss with a lot of potential upside if we break down below critical support. Okay, so we are good to go here. So what I'm looking for is a pullback here on a daily basis and a retest. We may not get it, but it's worth setting up a free alert to take advantage of. Daily chart, we may get it. And the reason why I say we may get it is that we rallied on Friday. Good day, but not a great day. Why? It's because we closed well off the highs of the day. When I see topping tails like this, what it's telling me is that I have sellers above I need to contend with. Monthly view. Let's see where the consolidation of resistance is at. Yeah, there's a lot of resistance here. So I think that these shares will come to us at our price. We don't need to chase them because there is a lot of overhead supply immediately above here. So I'll wait for that pullback and a retest. No need for additional alerts at this point in time. So let's bring up UGAZ. Let's go to the weekly chart here. Ugh, didn't mean to do that. Let's just trigger it anyway. All right. All right, weekly chart of UGAZ is not looking good here. We rallied last week. Again, let's go back to how we're setting up here on Sunday evening. Where is it? This is a 4-hour chart. We're up, and we may rally up higher here, but you have a lot of resistance here. Remember, this was critical support for a long, long time, and we broke it. So I'd be worried about a filling of the gap here. So while we may get early on in the week a new weekly high, the question is, do we close back above the prior support level? That's the key question. Stokes is still weak. RSI is flattening out. Let's overlay some monthly. That doesn't help at all. Let's take that off. Let's go to a daily chart. All right, so here is the line in the sand. We need to see a close above this support level to get us long of UGAZ as a short-term swing trade. My alert is already set here. So I need to see a new weekly high, and ideally I need to see a weekly close back above around 1180 per share. That's where we broke. at current, where to buy UGAZ right now, that would be my price target. And I'd look to book profits at that resistance level. That's a bet that it's not going to break out and close above it. If it manages to close out the week back above that support level or now resistance, then I would look to buy back in because, okay, the UGAZ has proven to us it's got the strength, the firepower, the rocket fuel to be able to close back above critical support. Good stuff. But I am skeptical that it's going to be able to do that at current, subject to change. This one will keep active for a couple of weeks. All right, so I'm looking at current for this current resistance level to be in the area where I long, look to book profits because we know we have sellers above there. And I'm keeping sensitivity light. I'm not going to wait until we hit that resistance level. If we come proximately to that resistance level, getting out, booking profits, then I wait for it to close back above that support level or resistance level, and we move on. EWW. Weekly chart. A beautiful, beautiful breakout last week. You could see that my alert was set. So what we have here is resistance immediately above. And I want to see it come back and give back some of those gains from last week. And if it does that retest, then we buy in and we put our stop loss right below it. And we're good to go. Daily chart. Let's overlay some automated trend lines here. Go with the monthlies first. We broke out several days ago above monthly resistance. This is a very powerful breakout here. Weekly time frame. Actually, wrong one. Let's stay on the daily. Let's overlay a weekly. Yeah, here is, we have resistance immediately above. So it's really worth our time and effort to wait for the pullback and a retest of the breakout point. Then we pull the trigger. And we'll send out a trade alert to members when we do that. So just keep in mind that while I'm bullish on EWW going into the new trading week, the charts are telling us we have resistance above. I don't want to buy into resistance because I know there's going to be a flood of selling when we go an inch higher towards this level. I want to buy on a pullback, an orderly pullback on declining down volume. And that gets me happy. That would really make me happy. So that's it for the symbols that we're watching going into the new trading week. Okay, so going back to the PCG, let's bring this up and I'll read your note. Okay. Nothing confirmed. They have until Tuesday to respond to the state of California. So this is still an ongoing bankruptcy petition. And currently you're short of the shares. All right. I'm going to have to put out a disclaimer here. I cannot give financial advice. You'll appreciate that. I'm going to share with you my observations. First off, I wouldn't touch. This is not a particular stock that I would trade because there's so many other opportunities out there. You need not play around with a stock that has a bankruptcy petition being filed. Why? At any given moment, this stock could either make you a fortune or could rip your face off. And I just don't want to see that for anybody. So you're long from 1280. So you have a profit here. All right. So I gave you my disclaimer about not wanting to trade positions like this because of the drama that they can create via the headline news. So I'm going to speak to the technicals. The technicals at current, we're on let's go to a weekly time frame. Actually, let's go to a monthly time frame. Get that higher level view. So obviously the trend is clearly down. I'm loving RSI here. You have a head and shoulders setup on RSI. Left shoulder, head, right shoulder. And that's a bullish setup. And we broke out last week. RSI broke out last week out of this inverted head and shoulders setup. We broke out as well on price, but, could have been shorts covering. Let's throw some overlays up here. We'll go with the monthly. All right, so you could see what it did is it bounced off of a historical support level on a monthly basis, and you got a short covering rally. Now you have a lot of resistance up here. Right at that 25.77 mark and at 17.73. So there's a good amount of room between where we closed out the week last week and before we hit critical resistance. Weekly chart. Hey, folks, if you just joined in, if I could ask you to click that like button, it really helps me out with the YouTube algorithm. I'd really appreciate that. Thank you very much. And thank you for joining me on a Sunday evening. Okay, so weekly chart. Let's take the trend lines off a moment. All right, so the weekly chart's favorable to your position because you saw a good amount of selling. Bob, any good aggressive option play? I know that you're more conservative. You're talking about being long calls or being long puts? To answer your question, what I would need to do is run a scan of extreme overbought trades or extreme oversold trades, or take a look at intraday setups where I'm seeing a stock. Supposing I'm long of it. Let's say I want to buy calls on a stock, and let's say that it's not an extreme oversold trade, right? Because that's generally when I would do that. I would sell puts and I would use the premiums to buy calls. That's a very aggressive play. However, when in times like that, I have a stock that is trading below 20 on RSI. It's at historical support, and I have a big short interest. So I have a lot of things going for me to drive the shares up higher. So that's my edge. So to buy calls, I need to have an edge over other traders because what's time doing? It's not working for you, it's working against you. That's why I like selling calls, because time is working for me. So I need to look at a position and say, okay, what's my edge? And I don't have any extreme trades on deck so far this week to trade options against. I would have to look at a stock that I am very bullish on, that is in a weekly uptrend, a daily uptrend, and has pulled back and is setting up on a 4-hour chart for a continuation move higher. And I don't have any at the moment that I could speak to. Maybe NUGT would be one because it broke out last week. It's in a weekly uptrend. The daily, it's in a daily uptrend as well now. But I would need to see a consolidation and then a continuation move higher. We'll take a look at NUGT for you in a moment. But getting back to PCG here, and I'm getting really long. In fact, I don't even have time to do it tonight. I don't have time to do it tonight because I have to get an alert out. I have to join members at 7 p.m. So I'll do a screen for Thursday night. We'll talk about a couple of trades setting up for Thursday night when we go live again. Unless, Blockchain, I'm not sure if you're a member or not, but if you are, just enter the 7 p.m. session and we'll discuss it then. We'll run some screens if you want. It's your time. During the 7 p.m. session, it's not my time. It's members' time. They bounce ideas that they have off of me, and I just validate them on the charts. So that's the game plan with the 7 p.m. intergroup session. So more to come. PCG on a weekly chart, a lot of topping action last week, a lot of selling. So what we did was we pulled back off the highs of the week. We filled the gap. So that is not a bearish setup. Let's throw some weekly trend lines up here. Yeah. So what happened last week is that we hit weekly resistance and we were rejected. So where are you on this dream driven? Yes, 7 p.m. Hey, Tom. Good to see you, pal. Where are you? And I were long or short of this position. I would set a stop. What was the high of the week? 13.09. I would stay even more conservative than that. A loose stop would be at 13.09, the high of the week last week. If we make a new weekly high, I would want to be out of your position. But if we close above any point in time during the week, above, let's call it 1187, I would be looking to cover that position because you'll be trading above a resistance level. Oh, good for you. Good for you, Tom. Yeah, I'm going to do some analysis I on Bitcoin. I'll talk about that more. Yeah, I did yesterday, and it bounced. I went over the analysis of Bitcoin and why I bought it yesterday on the weekend commentary. So you may want to check that out if you haven't already done so. The analysis of as to why. Yeah, daily chart in this, and I'm going to cut things short here and go over to the member session. Daily chart. Yeah, you're flagging out here. So I would even keep the stop really tight. You're flagging out. You break out above this resistance level here. Again, it's going to be around 1188 to share. And if we close above that resistance level, you got to get out. You want to preserve your profits. That's what I would do. You'll probably, so SP, all right, so you're still long of the market, Tom. So you'll the futures are setting up good for you for tomorrow. All right, with that, folks, everybody, thank you very much for joining. Members, we're going to start the members group inner session in a moment, inner circle session in a moment. Check your email. I might be a couple of minutes late with that, but I'll send you the link in a separate email. If you haven't already given a like to the channel, please, if you could do so, I'd really appreciate it. Subscribe, and thank you very much for joining in. And there's a link in the description area below to TrendSpider 25% discount. Also, there's a link to get a 15-minute alert sent to your inbox prior to me going live. So we hate spam too. You'll not be spammed. And everybody have a great evening and take care, Tom. And I will talk to you during the week. Have a profitable trading week. Be well.